Morning, everybody. This is Dennis with the Active Trend Traders. We're taking this President's holiday and put together a real quick tech tip video that I think you'll enjoy on the True Strength Index, or TSI. I hope you enjoy your President's Day. If you're off this day, I'm going to take the rest of the day off after we get this video posted and probably head down the gulch there to the beach. So, without any further ado, enjoy this video. And if you check the posting of this video, I'm going to include the video slides along with a special presentation on 5 objective exits that can be utilized with the active trend trading system. So until later, aloha and God bless everybody. G'day, this is Dennis with the Active Trend Traders. Welcome to today's tech tip, TSI Tick Up. Wait for it. I want to remind all our members that all materials are presented for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. There's a little bit about my background as a technical analyst. So TSI tick up, wait for it. Which is more important? This is a question that many traders always ask. The entries or the exits? I've come to a conclusion that in reality both, if both are based on objective events. So what is the best way to reduce the impact of emotional or impulsive trading? Trade a mechanical system. That's what we do with the active trend trading system. Within the active trend trading system, there are a handful of objective mechanical entries and exits that we utilize on our specific trades in whichever strategy we're utilizing. But today, let's focus on a simple and powerful entry. It's called the TSI Tick Up. So what is a TSI? Or it's the True Strength Index. The True Strength Index is a technical momentum indicator. Very similar to stochastics. However, because it does in its calculation utilizes momentum and this type of thing, I found it very good in not only showing overbought and oversold conditions, but also good for showing when momentum is shifting. So basically, technical momentum indicator that helps traders determine overbought, oversold of a security by incorporating the short-term purchasing momentum of the market with the lagging benefits of the moving averages, developed by William Blah back in 1991. The settings I use for the oscillator are 883. That's a little bit faster than a lot of people utilize, but I find it lines up very well with both swing highs and swing lows. So why wait for the tick up? Well, one, we have to define what the tick up is. When an oscillator has been moving down and often drops below the zero line, meaning showing that it's in a very oversold condition, the trigger alert is when the indicator, when the oscillator does its first move up. In other words, it may go from a minus 50 to a minus 48 in a day period of time. Well, that would be an indication that, okay, TSI has ticked up. This is not a cross. It is not a cross of the TSI. The signal is often actually slightly before the cross. And oftentimes there's positive divergence included with this, and positive divergence is an excellent additional clue which tends to heighten the probability of a successful trade. The entry can either be made at the close of the day when you're sure that you're getting a tick up, or at the open of the next day, or you can actually set in a conditional order to trigger at a specific price level. Let's see some of these in action in a 3 time frame and a couple of false signals. Note, the inverse of the bullish signals can also highlight places to either, one, take profits and or potential setups for downside trades. So we just take what we see here. These are all bullish trades and apply it in the opposite direction. So here's a daily chart of Tesla. The True Strength Index is this indicator here, and I said again 883. I use the exponential on this, and what I'm looking for is basically these tick ups, and I've got a couple of these. Now this is what I would consider a real tick up, where the TSI has been moving down for several days, comes into a support level, and then ticks back up. And then the trigger to get in would be, here's your tick up on this day. The following day, if you were doing first, you can either buy at the open the next day or wait for a conditional order somewhere within the body here. Sometimes it will move on up above this into the moving average, but oftentimes it is associated with a swing low or a retest. Now here's a couple of false triggers. With any mechanical system, occasionally you will have false triggers that wind up in a whipsaw type of action. And on this particular one can either put a stop loss directly below the swing low, and then as you can see, it would have been taken out over here. With a stock like Tesla, you may be looking at, okay, hey, I'm back into resistance. You can take a little bit of profit off the table there. As you can see, in this particular instance, and this is recent action on Tesla, we get several false triggers that would have just been reversed very quickly. And again, utilizing the low of the swing low, just below that is our trigger to get out. And then finally, we get some movement back up, and the TSI ticks back up and provides us an early entry. This early entry on this particular trade would have probably not been stopped out, depending on how far below this swing low we would have put our stop. And so, in addition, for when the real or the confirmed trigger took place here in November, we have some very nice positive divergence going on with the oscillator 2 strength indicator. Our research has found that this trigger, when you get this trigger along and it's combined with the positive divergence, tends to lead to stronger trades. And as you can see, once the new trend does get into effect, then the crosses or the tick ups oftentimes highlight continuation periods, as we see here. And over a 72-day period, Tesla went on and ran from the swing low to the swing high there at the top, about 59%. What about on a weekly chart? Is it as applicable? It's just as applicable. And so one should be watching the weeklies for when we're getting these oversold conditions, and then you get your tick up here. And then one could have either bought at the close of the week. I'm talking, when I say the close, I'm talking 10-15 minutes before the close of the market on a Friday, or been alert to say, okay, I want to trigger into this trade the following week. And this went on for a nice run early in 2016. And again, we get the same thing over here. We get the tick up along with some positive divergence. And there's your run over the 72 days. This the TSI is also very handy for the intraday charts. For those short period swing trades. Now here is a trade. This was in February this year. On a daily chart, we got the actual trigger on the 6th of February. with the intraday 1 hour charts. We got the trigger on a couple of days early on the 2nd. The 3rd was a Friday, then the 6th was a Monday. With a follow-on, a little bit of positive divergence there as it pushed sideways, and then you get your next tick up, which also corresponded to this area right in here, which was actually the 6th. In 11-day period from the low, swing low here to the swing high here, it went up 14% in 11 days. And you can see with a stock like Tesla, if you're an option trader, this works very well because it ran from 250 all the way up past 285 in a very short period of time. So it can be utilized for both either buying a long call or selling the weekly puts against this position. And then when could we exit? Well, a couple of different things, and this is just and we'll cover this in a future Tech Talk. But an exit could be, a close below the, a period where we close below the 8-period moving average after we've had a cross is one indication of a cross. So I hope you enjoyed this real quick Tech Talk. I want to remind everybody that, hey, if you have tuned into this bonus training, I want to thank you for that and invite you to come and become a member of the Active Trend Trading services. We offer 2 services. One is the Active Trend Trading services, which is, and you can get at a discount rate right now for 40% off the regular $54.99, $32.99. And then the other service we offer is one that is primarily for the index ETFs, the leverage ETFs. Has a great track record put together by my trading research partner, Mike Traeger, and what it and this is a separate service, but it's focusing on only trading about 3 to 6 times per year, and you can pick that up for $3.99 per year now, and it's regularly $99.99. Just go to this website down here, and you can get plugged in. So thanks for listening to today's Tech Talk. This is Dennis. God bless, and have a great, great week.